What's up everyone? I'm gonna make a quick video about SMCI since it's one of those stocks that has been going up massively in the last couple of weeks. So first of all, I personally didn't trade this. However, I put it on my watch list, and the main reason I didn't trade SMCI is because at the time I was fully invested into call options with Tesla, and I made a very good amount of returns on that. And so most of my funds were locked in already, so I didn't have much funds. And the second reason, when I looked at it, SMCI, the call option with expiry, it was over $2,000-3,000 for one contract. So it was already too expensive. And the main reason is stocks like SMCI, or the ones that they go up like this, it's so expensive is because of the implied volatility. The IV is too high. I believe for SMCI it was around 150%. So the IV was too high, and because of that the premium on the option contracts, which I personally trade normally, it was already too high, so it was too expensive. And the second reason is because unless you got in early, you wouldn't have made that much money. So the last day that it went up was basically the day that the earning came out. And before that, beginning of the January, or mid-January I should say, around January 18 or 19, that's when the huge volume came in with the green candle right here, as you see. And then after that it broke the resistance level, the previous resistance level, and it started going up. And from here you see from 350, 360, it went all the way to over $1,000 within just a couple of weeks. And before that there wasn't much movement. So as you see here, from August 2023 until the beginning of this year, the stock hasn't been moving that much. It wasn't until this massive green candle, as you see, on January 18 or 19, that the stock started a new upward movement, and then went all the way up. And here you see the earning came out. There's a huge gap right here. And what happened was, the day after the earning came out, let's take a look at the 15-minute chart. I want to show you guys something. So the first thing in the morning, the first 15 minutes, there was a gap up, and then the stock went all the way to 1081. And what happened was, you see a huge wick right here, and the sell-off started right after the first 15 minutes, and people start selling, and those who had like a huge share, they start selling and they start taking their profit. And the stock never recovered after that. It just kept going down and down, went from 1060, 1080 all the way down to $800 basically. So it dropped more than 20% in just one day, which is a crazy amount for stocks like that. So this stock, in my opinion, is just too risky, and the options, the call options or even put options, are too expensive. So buying one contract, $100, $200 out of money would cost you a few grand. And in my opinion, it's not the logical risk that I'm willing to take. If you got in early, you would have made a huge profit. But if you get in late, and if you're hoping for the stock to bounce back, then you're risking too much for, a possible outcome that may not even happen. For stocks like this, from my experience, it could basically drop even lower, because you don't see really a wick here on the daily chart. Even if we switch to a 4-hour chart, you see two red candles back to back, and you see just a body here, unfinished body. So it could keep dropping basically, and even if it bounce back, it wouldn't be going all the way to $1,000. What happens is, it could technically bounce back to $1,000 level, or it could go through a consolidation and then go sideways for a little bit. And what happens with the sideways, as you know, if you're into trading options, is that the value of your premium would decrease, and as the day goes by, your premium becomes worthless when the market goes sideways. So it's too risky, you know. So the major move has been started from the early January's, and if you haven't got in, it might be already too late. So that's my take, and hope you enjoyed it. Until the next time, cheers.